Hello, my name is Jennifer Watkins. I'm the Director of Payments, and I am here to talk to you about the elimination of the credit card chargeback policy. So let's start with the agenda. What is changing, for starters, is Section 6 of the Industry Agents Handbook. So we'll talk about that. We'll go through an overview of what is changing and why. We'll go through the credit card acceptance procedures, chargeback management procedures, and then best practices in both of those areas. And then I'll do a summary and we'll wrap it up. So what is changing? Let me start out right off the bat by telling you what is not changing is that travel agents are still responsible for their transactions and for the chargebacks that are a result of their transactions. So I think there was some initial concern from airlines that this meant that agents were just off the hook because we were eliminating the chargeback policy. That is not the case, and that is not what's changing. So what is changing is this: it's the credit card charge form, and the credit card chargeback policy. Just to give you a little bit of background, was started years ago when agents were looking for what they needed to be providing to the airline in the event of a chargeback to remedy the chargeback. And so with the JBARA, which is the Joint Advisory Board of the Agent Reporting Agreement, that's made up of agents and airlines, worked together to define, with the credit card industry, to define what is required to remedy a chargeback. And this was many, many years ago. And at that time, it was a signed imprinted charge form. At that time, there were some other opportunities to remedy chargebacks, for example, AVS. So with an address verification, you could provide an actual ticket. If you sent tickets to the customer's address that was the cardholder, that could be a remedy of the chargeback. You would prove that there's delivery of the tickets to the cardholder address, and that would work. With e-tickets, with changes in the industry, the only thing that was really left was a signed and imprinted charge form. And so that is changing. And so what the question then becomes, why is it changing now? And it's chip cards. And the fact that we all now pretty much in the US have chips in our cards. And probably a year ago, I had maybe half of my cards had chips in them. But at this point in the US, chips are really prevalent in the market. There are still a few issuers out there that haven't provided chip cards to their customers. That's a decision that they've made, knowing that there's a risk that if there's a claim of fraud on that account, that they will take the liability for that transaction. And so what has happened is we've updated Section 6. So effective February 1 of this year, Section 6 has officially been updated. The policy has been removed, and it now includes procedures. So for agents around card acceptance and how to manage chargebacks, and then best practices. So as you can see, we've updated the section to be titled the Payment Card Acceptance Procedures, Chargeback Management Procedures, and Best Practices. The goal of this section is to outline responsibility for agents when accepting payments on behalf of airlines, outline expectations for airlines and agents when managing chargebacks, and then provide best practices around card acceptance and the risk of fraud and chargeback management. I just want to highlight the procedures are based on payment card company rules for chargeback acceptance and chargeback management in the travel industry. And the procedures, or this section, will be updated as new technologies introduced or payment card industry changes are made. That's really important. I think agents and maybe airlines as well think that ARC sort of dictates what the policy is or what's included in Section 6 of the handbook. We may document it, but it's really driven by what's happening in the payment card industry and in the travel agency distribution channel. For an example would be, so 3D Secure, verified by Visa, Mastercard secure code. These are tools that are available in the industry to help reduce the risk of fraud. And if or when agents start using these tools, this section of the handbook would be updated. Just to give you all a little bit of background, ARC worked with the industry, including GDSs, the card brands. We've worked with OTAs, the acquirers and processors of your credit card transactions to support 3D Secure. At this point, we're waiting on GDSs to make changes to support it. But then it'll be an opportunity for agents to use 3D Secure, which will protect ultimately you from chargebacks. When 3D Secure is attempted or authentication occurs, the liability shift goes back to the issuer of the card. So that would ultimately mean that you as the merchant would not receive the chargeback. So we're kind of excited about that. We hope that that will take off as GDSs implement the changes to support it. We also outline in this section that it's important for agents to follow these procedures. And if the procedures aren't followed and airlines are unable to obtain payment from the card companies, the associated fees or the result of an improperly authorized transaction that in a charge coming in as a chargeback, the agent's financially responsible for the sale, the associated fees, and the chargebacks. So it pretty clearly states here that the agency is responsible. So let's talk about procedures. It starts with the agent making sure that your airline is accepting whatever form of payment is presented. If you're not, then they need to ask the customer for a different form of payment. We do our best to work with the GDSs to make sure we're synchronized so that when agents are coming in and attempting to do an authorization on a card that's not a valid form of payment for an airline, the GDS knows upfront at the point of sale so that we're not receiving those transactions. The next thing is agents are still required to obtain an authorization. This is kind of key. They need to be going into their GDS to obtain an authorization on every single transaction and do it correctly for the correct amount and only go through with the transaction if it's approved. Next is disclosure of terms and conditions. So one of the biggest sort of concerns or challenges that agents have is around customers disputing transactions based on an experience, so something service related, or disputing a transaction because they didn't get their refund, particularly on a non-refundable ticket. So we really try to make it clear to agents that they need to make sure that their customer understands the terms and conditions of the sale. What is the refund policy? What's the cancellation policy? Are there fees associated with canceling or exchanging a ticket? And also letting them know that there are ancillary charges, or could be ancillary charges, like for checked bags for basic fare transactions. And I think that could potentially get a bit more complex as time goes on and fares are bundled or not with certain ancillary fees. So particularly in a refundable situation, it's really key for the agent to make sure the customer knows that, for example, that ticket's non-refundable. And we tell them the best way to do that is online through a click to accept, because you can demonstrate through your web page what you are presenting to the customer for those transactions. It is challenging if you're not going to meet someone face to face. You might be able to get them to say over the phone, yes, I confirm that you've told me what the terms and the conditions of the sale are, but that's pretty hard to represent in a chargeback situation. Security. We tell agents that they have to keep data secure. We reference PCI DSS, Payment Card Industry Data Security Standards, and the requirement that they keep data secure in line with those standards. Next is kind of the big piece, which is fraud. And so we do tell agents they need to validate the identity of the cardholder and validate that that cardholder has authorized and is accepting that transaction. that's the tough piece, because most of the chargebacks we see are for fraud. And if it's a friendly fraud type situation, how do you prove that the cardholder is who they say they are and that they authorized the transaction? There's many possible ways to do that, but that's what becomes challenging for the agents. And we actually say in the handbook that number 5 on the procedures is to validate the identity of the cardholder, ensure that the cardholder has knowledge of and participated in the transaction, and retain documentation demonstrating this is the case. In the travel agency distribution channel, there isn't a way to absolutely validate that the cardholder is who they say they are and collect the evidence required to demonstrate that was done. Therefore, it's important to review best practices for card acceptance. So where an agent could have told the customer to come into their office and they could obtain an imprint of the card and a signature, and in the event of the chargeback, provide that back as evidence to reverse the chargeback, in a chip card environment, that no longer meets the burden of proof. While it's pretty compelling evidence, and it is still considered a best practice if you're meeting someone face to face to obtain an imprint of the card, if it can be imprinted, it's not going to absolutely remedy the chargeback in a case where the cardholder is claiming fraud in a card present situation. So they're basically claiming someone presented a counterfeit card. Let's move on to chargeback management procedures. As I said, the number one reason for chargebacks is fraud. And one of the challenges we have around fraud is friendly fraud. And the challenge is that we wouldn't have chargeback management really if there were not people out there that were perpetrating friendly fraud, or what I call chargeback fraud, where they're using the chargeback system to perpetrate fraud. They've taken the trip and now they've come back and they said, you know what, I don't have the money, I can't pay for that transaction, I shouldn't have taken that trip, or I shouldn't have authorized my daughter to take that trip, whatever it is. And now they're calling their card issuer and they're saying that's fraud. We wouldn't have chargeback management if it weren't for people who are perpetrating friendly fraud. And from everything we've seen, it's a pretty high percentage of the fraud chargebacks that are really friendly fraud, where the customer actually did participate in and authorize the transaction. So we as consumers, and I tell this to agents, and I think it starts to sink in a little bit, where we as consumers in the US have what's called the Fair Credit Billing Act, which protects us against inaccurate and unfair credit card billing or credit card practices. And so what that means is we as consumers, if we're charged on our credit card for something that we did not authorize, and it's probably happened to everyone at a time, one time or another, we're able to contact our card issuer and say, oh, you know what, I didn't do that transaction, and we will not be responsible for it. But it's because of this act and this protection that we have as consumers that means that we now have the ability to just call our issuer and charge something back. It allows, sort of opens the door for chargeback fraud. So the credit card company rules are basically, they have 3 main constituent groups. They have the cardholder, who they want to pull that card out of their wallet when they're going to pay for something. So they want that cardholder to be happy. They have card issuers. And so we hear quite a bit time to time in the industry about card issuers selecting one card brand over another, or switching from one card brand over another. And that each card brand wants to make sure their brand is the most attractive to that issuer and therefore to the customer. But then they also have the merchant group, which is us, the airlines, who they want to make happy as well. They want to make sure that you are willing to accept that form of payment for any transaction. So basically it ends up being sort of the consumer and the issuer, because it's the issuer who issued that customer, the cardholder, that card. and the airline and the acquirer. And so all the airlines have acquirers, or else you'd be working directly with American Express on that side to do this back and forth to manage chargebacks. So it looks really like this, where you can see step one to the right is the cardholder is contacting their issuer, going back to the card brand, it's Visa, Mastercard, one of those, and going back to the acquirer then, who reaches out to you as the airline and says, hey, you got a chargeback on this transaction. And then you have an opportunity to respond back to the cardholder with evidence that that really was them. In the case of an American Express or Discover, American Express is often the issuer of the card, and they handle the acquiring piece as well. So it's really a closed loop system for American Express and Discover. The challenge is now that American Express also has developed relationships with banks. So they've introduced some issuers into this space as well, which adds a little bit of complexity. It really kind of keeps it simplified when American Express has that full picture. And obviously, in the travel agency distribution channel, in addition to you, then it's up to you as the airline to reach out to the agency to get the evidence that you may need to represent back in support of that chargeback. We do point out under chargeback management procedures that airlines may be in the best position to respond to some chargeback types, for example, fraud or services not rendered, because you have proof that the cardholder took the flight, and that's kind of key. So if there's a claim of fraud, what Visa has said is that in the case of a claim of fraud or services not rendered, if you as the airline can provide proof that the cardholder was on the plane, that will remedy the chargeback. And I'm going to talk a little bit more later about the Visa chargeback remedy. For American Express, Discover, Mastercard, they consider that compelling evidence. So the result is meant to be the same, where you've provided proof that that cardholder actually did participate in the transaction. The expectation is, though, that if other evidence is required to attempt to reverse the chargeback, the airline is expected to contact the agent prior to the close of the chargeback response window to obtain additional information about the customer and the transaction. There's nothing different here. It's always been the intention of the chargeback policy and Section 6 of the handbook that the airline would be reaching out to the agency to get whatever evidence you might need to remedy the chargeback or support the chargeback. So this isn't anything different. But we also do point out for agents that if the airline is unable to obtain a reversal of the chargeback from the payment card company, the full financial responsibility for the debit memo issued is on them. The result is that they are responsible. Moving on to, so Section 6 of the handbook now includes the first 3 pages are procedures for card acceptance and chargeback management. The next 11 pages are around best practices. So we've really tried to focus on educating agents about what they should be doing at the point of sale to manage the risk that they're a fraud, basically. So we talk a lot about how they can develop a strategy to try to reduce their fraud exposure. And we have a fraud team here that does webinars and face-to-face meetings with agents to talk about this, because whatever we can do to help them at the point of sale is going to help reduce the chargebacks. And so we focus on, I'll just spend a few minutes talking about what we tell agents. We talk about sort of weighing the risk of fraud against the customer impact. So for an agent that's requiring everyone to come in and meet with them face-to-face versus, that's got a pretty heavy customer impact if you're requiring everyone to come in. So if that's a pretty low risk of fraud, it's someone that for example, you're not going to require them to come in to your agency. So it's around, but it also applies to things like CID or 3D Secure would be another example of you're managing the risk that that transaction could be fraud against the impact of the customer. An impact to customer could mean you're going to require them to put in a one-time passcode that they received on their phone, or you're going to require them to provide their full address. I mean, everyone does this now. So it used to be that providing a full address was really up to the merchant to decide whether or not they wanted to capture that information, but it's so prevalent now. CID is another one, and CVV, this is the unembossed number on your card. Almost all merchants require it now. And then it's lost revenue versus the expense to manage. So if you've never had a chargeback, you're probably not going to spend, hundreds of thousands of dollars putting in place a sophisticated fraud prevention tool to help you manage the risk. So there's that balance of expense to what the loss of revenue is. Obviously, for an agency that gets hit by fraud pretty hard, they're going to need to invest some money into stopping it in the future. This is what happened with the OTAs. Years ago, they were all excited about, tapping a new market. They're going online. They are opening up travel to the world. And then it didn't take that long before the fraudsters came in and said, oh, yeah, this is great. We're going to have a heyday here. And then the OTAs started to see chargebacks. And it was actually out of that Certify, who's a big fraud scoring tool, fraud prevention tool, came out because they needed to put something in place to help them manage the risk of fraud. And then finally, knowing your customer versus growing your business. So I do talk to agents that are only doing business with people that they know or that are good, strong referrals. And then there's other agents that will basically take any transaction knowing that there's the risk that could come back as fraud. And so it's balancing those pieces of the fraud prevention strategy to determine what you want to do going forward. So it's requiring every customer to meet with you face-to-face versus accepting every transaction without doing any validation. So we talk about sort of a layered approach to fraud prevention, starting with getting an authorization. That's a must-do. So getting the authorization, but also making it clear to agents that getting an authorization, all that does is validate that that is a good card. In other words, it hasn't been reported as fraud versus actually doing any validation of the cardholder. So it's the card is valid, and that the customer has the available what's called open to buy. Their credit is available on that account to allow them to make that purchase. That's all it's doing. It's not validating anything else about the customer. But then the next step would be to do, okay, let's do address verification. Let's confirm that the person that I'm working with has the address of the cardholder, or this is one way to validate that it is the cardholder. Validate that they have the card in front of them. That was the intent of card ID, card identification. It's CVV2, CVC2. It's the unembossed card, or the unembossed number on the card. This was put together years ago to stop dumpster divers who were basically pulling out pieces of paper that had card numbers on them. It was a way to validate an additional element on the card that wasn't available to that type of fraudster. The challenge today is that sometimes those bad guys do have that number. So it's not going to fully protect you. There's no liability shift involved with doing card identification verification or address verification. But then it's also taking all of these pieces of data to help put together a strategy for managing risk. So if you're an agency in Wisconsin and someone's contacting you and they want to purchase a ticket from New York to Accra, Ghana, think about why they contacted you as an agency. So this is what we talk to agents about, and just to help them put together a strategy to reduce their risk and just raise awareness. One of the things I tell them all the time is, if you're an agency that knows your business, Maybe you're a small business. You know what your customers, how they behave. You know where they fly, then you know how they travel. When you start to get a request to do something outside of that, that can be a red flag. So, but it also, we're trying to encourage them to use free internet tools, whether it's a phone lookup or email address lookup or just Googling information about the customer. Just do some verification of that data. There's a lot of data you can receive from the customer at the point of sale that's going to help you evaluate the risk. And then on top of that, you can have a tool that helps distill it down rather than doing it manually. And on top of that, then you have IP geolocation. This is a tool that can help you start to identify where the cardholder is, or I'm sorry, the customer is. Device fingerprinting. Have you communicated on this computer before? Is it a good computer? Does it belong to the cardholder? 3D secure. We talked a little bit about that already. That's basically validating, generally done now through a one-time use code that's sent to your phone as a way to validate your identity. And then behavior modeling. There's online, bad guys act differently than real customers. And so there's companies out there that will help you identify what that is. The challenge is in many of these things, the bad guys have figured out workarounds. So IP geolocation is a great example where they figured out a way to work around that. And then there's machine learning. And you can put that on top of all of this, and it helps manage the data quicker, better, to sort of identify what fraud looks like. Next, we'll talk about chargeback management best practices. So out of the debit memo working group, hopefully you've all heard of the debit memo working group. It's made up of agents and airlines. We have a chargeback subgroup of that group, and we've defined in that group what the codes are that all chargebacks fit into. So we've got these specific reason codes. It's no approval code, unauthorized or fraudulent charge, expired card, invalid card number, service related, do not recognize, refund not received, duplicate processing, or other. And so I'm going to go through these things with you. They sort of fall into these 4 categories. But let me talk through what the chargeback flow basically looks like. And this is something we worked with airlines to define sort of best practices around chargeback management. And what I'm going to show you is an extremely simplified process. The challenge is chargebacks are complex. And especially when you get into service-related things, it's not as simple as sort of going through a flow and checking off the boxes to get to the correct answer. It is complex. And so I don't want to sort of overstate as I go through this that, you know, just follow step A, B, C, and D, and you'll be good to go, because it's really not that simple. But for the bulk of the chargebacks, hopefully it is this simple. So it starts by determining whether or not that chargeback that you received was reversed or refunded. Was it voided by the agent and the customer already got their credit back? Was it refunded? If so, then respond back to the card brand saying that's already refunded. If it wasn't, the next step is to determine if it was flown. If it was, then the next step would be to determine whether or not, determine what the reason for the chargeback was. So if it's flown, the answer is yes, then we'll have to evaluate, and I'm going to get into that in a little bit. If the answer is no, it wasn't flown, well, was it refundable? If it is not refundable and it's not flown, then the question is, do you suspend the ticket? And this would have to be up to the airline, each individual airline to determine. The airlines that we've worked with have defined that as a best practice to suspend that ticket. If it's refundable, they often respond back and accept the chargeback and say, yes, we'll take that. So here's sort of how the chargebacks fall out. We'll start with the operational chargebacks. So no approval code obtained. this one's easy. Determine whether or not an approval code was obtained. So most acquirers hopefully are doing this for you, where if they receive a no approval code obtained chargeback, they're able to look systemically to determine whether or not a valid approval code was obtained. If it was, then they provide that back to the card company and it remedies the chargeback. If there wasn't a valid approval code obtained, then you're reaching out to the agency with a debit memo because they didn't get a valid approval code. Expired card, this is similar, although it may not be you're not looking at an authorization log. It's just a matter of determining whether or not that card is expired. If it is, then you're contacting the agency. The challenge is sometimes it's just a crossover between one day to the next where a card's valid or not valid, depending on what the expiration date is. So hopefully you can work it out with the agency. They may just be able to go back to their customer and get a new form of payment. Alternatively, you would be sending them a debit memo for that. Invalid card number. This happens from time to time where a card number will pass the check digit routine. So ARC does validation on cards to ensure they're, quote, valid. But if it passes the check digit routine, it's a good number, we'll pass it on to the card brand, and it will reject when it gets to the card issuer because it's not a valid number. And so that would come back as an invalid card chargeback. And then you would respond back if it is an invalid card saying, yes, we'll take that chargeback. And you would go back to the agency then and saying, with a debit memo or something, at least notifying them that that was an invalid card. It's probably going to come in the form of a debit memo if the chargeback can't be resolved. Duplicate processing. So this gets a little bit more complicated. And what we generally see as duplicate processing is where there's two different ticket numbers that look very similar. So it's the husband and wife traveling. They may have the first last name and even the same first initial. They're on the same flight, same itinerary. It looks very much the same. And so there's best ways to handle that as well. So you start by looking at, is it the same ticket number processed twice without a refund or a reversal? If the answer is yes, somehow same ticket number got processed twice, ARC is pretty diligent about making sure we're not outputting duplicate transactions for you that don't have a refund or a reversal associated with one of the transactions. But if that does happen, then you accept the chargeback. You've been paid for the ticket the first time, so you would accept the chargeback and be done with it. If it is not the same ticket number, then you go, were there multiple tickets for the same passenger? If the answer is no, provide documentation about the different passengers. So this is where a husband and wife type situation where you're going back and saying this is actually a husband and wife and they traveled on two different ticket numbers and respond back that way. If there were multiple tickets for the same passenger, then is the itinerary identical? I mean, there's some corporate travelers that do the same trip week after week. So maybe it's just confusion over one trip versus the next trip. If it's not an identical itinerary, you're responding back to them. It's going to be different ticket numbers as well. And you're going to say, this is two different trips. The amount might have been the same, but it's actually two different separate charges and they are valid. And if the itinerary is identical, I mean, that can happen where there's two different ticket numbers for identical itineraries and there's something glitch happened in the system that caused two tickets to kick out and the customer was billed twice. I do not see that. I can't think of a time where I've seen that happen, but I've been told that it does happen sometimes. Refund not received. This starts with determining if a refund was received. If it was, then you respond back saying, yes, this customer actually did get their refund and we output it on this date, that kind of thing. If the refund wasn't processed, then you determine, well, was it refundable? If it is a refundable ticket, then what the airlines we've worked with are doing is accepting the chargeback and making the ticket unavailable. So they're suspending the ticket. If it is not a refundable ticket, then contacting the agency. And this is where the best thing an agency can do is provide you with the disclosure of terms and conditions, because the customer's claiming they didn't get their refund, but the agency now needs to demonstrate that that customer knew that that transaction was non-refundable. And so it would be sending that disclosure back to the card company saying, this click to accept, you can see the customer did that on this website, and it's no longer, and the customer can no longer dispute that the disclosure of the terms and conditions were not provided. The customer knew this was a non-refundable ticket. If the agent cannot prove or provide disclosure, then they need to then you are contacting the agency with a debit memo. Next, service related. So were services provided? This is tricky because it's about, you have information that the agency doesn't have, and it's often about what the experience was for the customer as they traveled, which is completely beyond the control of the agency, but that you have information about. So were services provided? If the answer is no, if the customer did not fly, there was a service interruption of some sort and they did not fly, then they are due a refund. And that should come, you would accept the chargeback and be done with the transaction. Contact agency for additional information if the services were provided. And they can, if the services were provided, you would ask the agency for additional documentation saying, hey, this customer got what they said or got what they purchased. They're claiming they didn't, but they did. So here's the flight manifest and documentation from the agency about what the service was that they purchased. If there was a service interruption, like I said, they're due a refund, they accept the transaction. If there wasn't, then contact the agency for documentation about the terms and conditions of the sale. Did they do a click to accept? If so, provide that back to the card company. If they didn't, then you're contacting the agency with a debit memo. Next, late presentment. This is one I don't see very often at all, but the debit memo working group, the chargeback subgroup, thought it happened enough that it would sort of was worth mentioning. So, was a transaction settled late? And so this can happen. It's pretty rare where an agency, something happened and it didn't hit their agent report where it should have, and now it's being settled weeks later. If it was settled late, then you're contacting the agency with the debit memo. If it was not settled late, then you're responding back to the card brand saying, or your acquirer or credit card company saying, that was not settled late. Why am I getting a late presentment chargeback? Next, paid by other means. I think this happens pretty regularly because the agency sometimes uses the wrong card. So they're booking travel for a corporation, but then in this one case, they booked personal travel and they used the wrong card to pay for the personal travel, or they used the employee's personal card to pay for corporate travel, something like that. So they've picked up the wrong account. Contact the agency to determine if they did pay by other means, and if they did, then you're contacting the agency saying, well, you need to find a way to bill your customer and pay us via debit memo process. If it wasn't paid by other means, then you're responding back to the card brand saying this wasn't paid by other means, this is a valid charge. Incorrect amount. Contact the agency to determine if there was something incorrect in the amount of the transaction. And then provide whatever documentation you get from the agency back to the card brand saying, yes, this is valid and the correct amount. If it is the incorrect amount, then accept the chargeback and then resolve it with the agency. This is where there's usually a lot of back and forth and confusion about what's driving these chargebacks. I think, again, these are pretty small number of chargebacks, but they still do happen. And then I saved the best for last, which is fraud. And I've lumped in do not recognize in here as well. So it starts by determining if the ticket was flown. If it was flown, and then you contact the agency for additional information, and you take the flight manifest from that and whatever documentation you get back from the agency and provide that back to the card brand. That's best practice. Some airlines are just providing the flight manifest, which is probably the key piece of the valuable data there, rather than reaching out for documentation from the agent as well. I do try to emphasize to agents when I talk to them about this that there are airlines out there that are doing this for them, that are providing flight manifests on their chargebacks, and the result is that the agency just never sees the chargeback. And so really trying to highlight that there are airlines out there that are helping agents with this, and if I know who they are, I will talk about them. So if it's not flown, then suspend the ticket, accept the chargeback and suspend it is kind of the best practice. But again, it's up to the airline, individual airline, as with all of this, to determine how you want to handle it. Contact the agency for additional information if it is not flown. And then provide that documentation back to them, to the card brand, as sort of evidence. If it's suspended, then maybe you don't need to do that. If it's not flown. I guess in the end, if the flight manifest does not match the cardholder and it is flown, then you're going to be going back to the agency with a debit memo. And that is the bulk of what happens with fraud chargebacks. So someone flew, it wasn't the cardholder, and that documentation is not going to remedy the chargeback, and the agency is going to be responsible. All right, chargeback responses. So I, in addition to talking about fraud prevention for agents, also talk to them about chargebacks. We're trying to improve the chargeback management process. And so the instructions start with determining if the transaction was refunded. So as you're doing as a best practice, identify if the transaction was refunded. We're asking agents, if they get a debit memo or a chargeback, to do that same validation. Second is contact the customer. And this is key, because if they can't contact the customer, that is often the first indication of a fraud transaction. So the fraudsters don't generally give you a number that you can call them back on. They will sometimes, but if you can't, they are unlikely to return a phone call if you receive a chargeback. But the first step is to contact the customer, because oftentimes it's just confusion where the customer didn't realize that what that transaction was for. So one of the things that we did as part of the chargeback subgroup of the debit memo working group was to improve what is included on the cardholder statement. And so both Visa and Mastercard now will allow for the agency name to be provided in the city field of the cardholder statement. So for an airline transaction, it's going to say the name of the airline, and it used to say just the city state, either of the airline or the agency. Now your acquirer can provide the name of the agency, which helps the customer recognize the charge better. Because they're often saying, well, I didn't buy that ticket directly from the airline, I bought that through an agency. So it can cause confusion. If it's true fraud, what we tell agents is look at your fraud prevention parameters and change them to catch that in the future. But there isn't a lot you're going to be able to provide. In fact, there isn't anything, if it's true fraud, that you're going to be able to provide back to the airline, to provide back to the card company, that's going to remedy that chargeback. There isn't a way to win that chargeback if it's true fraud. The liability sits with the merchant, which is the airline/agency. Next, we tell them to put together a response. So if it's not fraud and it's their customer and there's some other dispute, provide proof that the cardholder took part in the transaction. One of the best ways to do this is to show that this is a customer that you've worked with in the past. So if this is a customer with using the same card they've used to purchase travel with you in the past, show that as documentation to show, I have a relationship with this cardholder. They are who they say they are. I've worked with them in the past, have not had issues, and now they've decided to charge back this particular transaction and are perpetrating fraud through the chargeback process. Proof that the true cardholder authorized the transaction. Same kind of thing, providing any documentation you have to show that the true cardholder authorized the transaction. Copies of tickets and or details of itinerary, copies of invoices, including email addresses. So if an email address on an invoice matches an email address that's at the card company, at the issuer, that's going to be really helpful in demonstrating that the cardholder was involved in the transaction. Signed acknowledgement of terms and conditions. So if you have something that shows that you had them in your office and they accepted the terms and conditions of the sale, that is helpful. Or any other compelling evidence. And we have a section in the handbook about compelling evidence. And then I tell agents, if this is chargeback fraud, friendly fraud, and you have a relationship with this customer, basically they're stealing from you. And it's the same for airline on direct sales. If you have an airline, someone who's purchased something from you that's a customer of yours, they've perpetrated fraud, and going to collections is a good option. And then around disclosure of terms and conditions, again, I talked about this a little bit earlier, but be sure to be clear on what the refund policy is. That seems to be the most common dispute over terms and conditions. What the cancellation policy is, exchange rules, what the fees are associated with exchanges, and then whether or not there are going to be ancillary charges on that go along with that transaction in the future. What have you done to validate that the cardholder is who they say they are, that this is not fraud? And again, that's the biggest challenge is because most of the chargebacks are fraud, is demonstrating that the identity of the cardholder was validated. As I said, airlines are often in the best position to provide flight manifests and information about what took place on that flight. Was the cardholder on the plane? And so I talk to agents and I'm telling you that it's best, you're in the best position in many cases to provide the remedy for that chargeback because you have the flight manifest information. And so we did a webinar with Visa last year about compelling evidence. And let me just go through a little sort of highlight for you what is considered compelling evidence. Providing information from the flight manifest, it needs to be a passenger name. It has to include passenger name, flight details, proof of flight departure with the passenger on board the plane, seat assignment information, and if providing a flight manifest, provide an explanation about how to read it, because they're not that they're all different, but the card companies are not experts at reading flight manifests, so they need an explanation as to how to read it. So examples would include a screenshot from an airline usage system that highlights the key data points, copies of flight manifest pages with passengers and itinerary information highlighted. It's important to know that information about the reservation of the passenger doesn't meet the requirement. Compelling evidence. So I do spend quite a bit of time talking to agents about this. And I guess what I like about the change to the policy and the fact that we're no longer pointing to a signed imprinted charge form as the sort of end all be all is that it opens the door now to actually working together to provide compelling evidence. And this is evidence that demonstrates that the cardholder took place in the transaction. So evidence of relationship with the customer, I've talked about that quite a bit. Email correspondence, evidence of the relationship between the cardholder and the passenger. So one of the key questions I get from agents is, what do I do in a situation where the daughter has taken the mom's credit card and used it to purchase something? And how do I demonstrate, how do I win that type of chargeback? And the key is to demonstrate that they live in the same household and that they have a relationship. And so whether you do that via social media or you have prior relationship with them that shows that, that's going to be helpful as compelling evidence. Photographs or social media proving that the cardholder took the flight. We work very closely with some ticket vendors like that sell concert tickets and things like that, and they handle their chargebacks very similar to how we handle our chargebacks in the airline industry. They I have a great story from a friend who got a chargeback from a guy who went to the World Cup in South Africa and posted about it all over Facebook, and then came home and charged back the transaction. She got the chargeback and she knew it wasn't fraud. So she went and she looked at his Facebook page and saw all his posts in South Africa and provided that to the card brand as compelling evidence, and she won. So it's a great example of this customer actually did take place in this transaction. Copies of valid driver's license and passports. Yeah, that's helpful. It's compelling evidence. It will not remedy the chargeback. The bad guys are pretty good at doing counterfeit driver's licenses and passports. Evidence of other valid charges tied to the original transaction. If there are ancillaries that took place on board, that's going to be helpful. Flight manifests with the cardholder. That's going to be helpful for Visa, Mastercard, and a Discover. It's considered compelling evidence. For Mastercard, Discover, and Amex, it's considered compelling evidence. For Visa, they consider a remedy. And an imprint of the card and signature. So even though that's no longer a remedy, it is still compelling evidence. So to summarize, there isn't really anything that's changing for airlines. I guess the real difference is that a signed imprinted charge form no longer remedies the chargeback. The expectations of what airlines will do when they receive a chargeback as far as contacting the agency and presenting documentation back to the credit card company, that has not changed. So there's really not a big change for you other than that a signed imprinted charge form is no longer a remedy. The airline will still be going to the agency, and the agency is ultimately responsible for those chargebacks. So Section 6 has been updated. It's effective February 1 of this year with procedures for card acceptance and chargeback management and best practices in both areas. And we recommend that you update any documentation you have in your correspondence with agents that make reference to the chargeback policy. And that's all we have. Thank you very much for participating. If you have questions, feel free to reach out. Thank you very much.